Good evening, everyone. You will have probably noticed that there was on the welcome screen a logo for Rome Resources, and on here there's Pathfinder Minerals. So, a bit of explaining to do. This business is a critical minerals exploration project in sub-Saharan Africa. Pathfinder Minerals is an AIM cash shell. It did have some assets in Mozambique, which it disposed of last year, and therefore became an AIM cash shell. And so the clock started ticking on finding a replacement project, which is Rome Resources, which is where Rome Resources comes in. So it's a reverse takeover. The timetable is set for readmission next Friday. So it's all ready to go ahead. You'll see on the right there is the admission document RNS. And so I'll tell you all about what Rome Resources, what the project is, and what we're trying to achieve. We'll pass through that. So Rome Resources is currently trading on TSX Venture Exchange. The geological team they have there, the two guys have got a phenomenal experience base in sub-Saharan Africa, specifically in Democratic Republic of Congo, which is where their principal asset is. We're focusing on tin as the asset, as the commodity. Very positive forward curve for tin. We'll talk about the demand and the supply aspects of it later on. We're sitting in about 8 kilometers from the world's highest grade tin mine. So it's got a very good address in that respect. As I mentioned, we're coming to AIM next week. We've raised $4 million for our next drilling program, so that will take us through. There's a very aggressive drilling program taking place starting immediately on readmission. A lot of activity all the way through the second half of this year. And the board is being beefed up. It's basically a geological focused board. So we think it's very much a fit for purpose board with all the operations that are going to take place in the coming months. DRC, massive country, as I'm sure you all know. What we have here is a map showing the track record of the two principals of Rome Resources who come over from the Canadian entity. There's Mark Gasson and Klaus Eckhoff, and they have spent at least 25 years, each of them, in DRC, basically exploring for minerals and bringing them onto the market and monetizing them and moving on to the next one. So we have a string of them. You can see them there, the Kibali Gold, Manono Lithium project and the Kipoi Copper project down in the south. The most relevant one for this talk is the Alpha Min tin project, which is right next to the Rome Resources project. They discovered that tin project about 5 years ago. It was probably about a 20 million Canadian market cap. It's now 1.4 billion. So it's very much a success story, which we're hoping to replicate. And this is the board. Mark, South African geologist. I've put in bold the kind of the DRC-focused elements of this. He was responsible with Klaus for these 3 or 4 discoveries in DRC. Myself, I'm a geologist. I came on as a non-exec when it became a cash shell to drive the RTO, so we're almost there. Serge is a Belgian lawyer, which is a Belgian qualified lawyer, is actually a DRC citizen, so very useful to have him on board. Also extremely useful, Jamie Anderson is Australian, but he's based in DRC, and he's been pushing with Mark and Klaus a lot of these projects going forward, so he's invaluable to the team. Klaus, at the moment, is a strategic advisor. He's basically, with Mark, the brains behind all the discoveries that have been made to date. Focusing in on the project itself, you'll see there's the square area in green and blue combined are the 2 licenses that Rome hold in DRC, and there are 2 major tin anomalies that have been identified on both of these. We'll go into more detail, but you can also see the Alpha Min mine 8 kilometers to the southeast, and effectively it's a fairly simplistic map, but that pinkish purple blob is a tin granite similar to what you see in Cornwall. And the tin is developed in stratiform veined structures running all the way around the granite. So we're in the same play as alpha min, which is, as I mentioned, very high grade. So the initial work that was done by Rome was effectively soil sampling, so just surface soil sampling, just to see what the metal anomalies are in the ground. And they came up with these two anomalies, Calais and Montagoma. We'll go into more detail. What that allowed them to do is to then focus on a drilling program. So there has been an initial drilling program taking place over the last couple of years, which has high graded these two anomalies. We'll look a bit at this one. So Montagoma, which is the eastern anomaly, is effectively a polymetallic anomaly. It is copper, it's copper, zinc, and tin. There's some pretty high grades. I won't go into the numbers, but we'll talk about the reference to grades elsewhere in the talk. But these are very encouraging grades. As I say, a long strike, a long trend from alpha min. This is a limited drilling program. Only 3 or 4 holes have been drilled. It's not enough to evaluate resource numbers. That's what the next phase of the work program is going to do. But it's been very interesting in much as there is an interesting analog for this, which is the San Rafael deposit in Peru, where copper, zinc at surface, and then tin comes in deeper in the system. So that's exactly what we're seeing here. What we're seeing at Montagoma is actually the upper part. So we're seeing the copper, zinc, and tin. In Calais, which is just to the west, we're actually deeper in the system. So we don't get the copper and the zinc. We're just straight into a pure tin anomaly. And you'll see 12.8% tin, 3.39% tin. I mean, these are really high grades for a tin. If you bear in mind that most of the Cornish tin mines are generally less than 2%. So these two targets, Calais and Montagoma, are going to be the focus of our drilling going forward, which is actually going to start the minute we readmit. So week after next, we'll be starting to drill. It's just a simplistic kind of view as to how this looks very similar to the Alpha Min and Palmer mine to the southeast. As I mentioned, it's by DRC standards just down the road. And you see the geology, it's very similar, dipping sequences where we see high-grade tin and copper coming through. Really, I mean, it's a very similar situation. So in terms of grade, in terms of tin around the world, the highest grade is alpha min. It's about 4%, you see that. We've taken this from the Cornish Tin website, but it's very useful. It's the top 10 grade tin mines in the world. And alpha min is head and shoulders above everything else. And so we're in the same play. We're just down the road. San Rafael, as I mentioned, is next in Peru. And then you get into the Cornish, most of the Cornish tin projects. But the majority of the world's tin is produced from very low grade mines in Australia, Morocco, China. And so to have a high grade project is a very valuable thing indeed. And what that helps us do, if we look at the cost to mine in terms of the graph on the left shows you a plot of tin grade going up on the vertical axis and the reserve size going from left to right. And so most of the world's tin projects are in that lower kind of cluster, whereas Alpha Min's mine at the top in red, just as I say, stands head and shoulders above most of those in terms of, it's not the largest project in the world, but it's certainly the highest grade. And so high grade will then translate into relatively low cost. So if you've got a higher grade, obviously you don't need to move as much rock to get the same amount of tin. So the current price for tin is around about $35,000 a tonne. The red line is the Alpha Min. So $10,000 to $12,000 a tonne is what they can produce at the moment. Alpha Min have just announced 28% quarter-on-quarter increase of their output. So things are going really well there, and they're pulling down something like $40 million a month in terms of revenue. So it's a very good business. As you get down to the lower grades, the costs start to go up. Now, if tin prices were depressed, say down to 20,000, a lot of those would not be making money. So, we're in a very good position by being similar to the Alpha Min deposit. Just something about tin itself. So, it's often in the press kind of referred to as the forgotten critical mineral, and it really is. A lot of people talk about rare earths and nickel and chromium and lithium, but tin is ubiquitous in the electronics industry, and of course with the increase in computing power from AI, etc., much larger number of chips are being produced, and therefore the tin is required to stick them all together. So you can see on the left recent work on tin being used for lithium-ion batteries, which as the anodes, which again, if that comes to fruition as being one of the best battery technologies, then tin again is going to see a renaissance. The central panel on the left, which came from an MIT study, it's kind of semi-quantitative, but it shows that tin, these are the commodities most impacted by the increase in demand from the energy transition through to electrical energy. Tin is right up there at the top. The predominant, the purple, the right-hand end there is due to IT, so it's due to this increase in AI, etc. The tin price, as I mentioned, is about $35,000 a tonne. It's probably got scope to go further. It really does. And the reason for that is the fact that, I'll just take a minute to explain this graph. So 2019, so you've got on the left, you've got the uses, which is traditional use of solder, and green transition, which is the additional use in the electronics industry. And then right to the right-hand end of that is where the supply comes from. So it's the brown is existing mine supply. The rather peculiar grey is recycled, but the orange is a deficit. So you see, in 2019 there wasn't much of a deficit. 2025 is anticipated to be quite significant, and again growing slightly into 2030. So there is no real downward pressure on the tin price longer term, because that deficit is not going away. So clearly what we're trying to do is reduce that deficit with tin. Alpha Min itself produces 4% of the world's tin. They plan to produce about 7%. So these are significant deposits. In terms of the work program, so having raised the 4 million for the readmission, that's going to go straight into the ground. Montagoma, there'll be drilling of deeper holes in Montagoma and Kalai straight away. A significant work program that is targeting a maiden resource by the end of the year. So the plan would be to, by the end of 24 or at the very latest, the beginning of 25, is to have a resource evaluation for the tin, which will help tremendously in basically benchmarking the value of the project. And that's for both of those projects. So this is clearly quite simplistic. You are here. We're just about to start drilling. We will be running the assays and reporting throughout Q3 and Q4, and getting our resources by the end of the year. After that, we make a decision on future strategy. As I mentioned at the beginning, Mark and Klaus have historically worked projects up and effectively sold them to people like Alphamin or the Chinese tin producers or other large entities. We're not going to be a mine developer. We're basically going to add value by exploring, getting a resource number, and either selling or joint venturing. So it's a relatively simple business model. And the summary, essentially, so Pathfinder are acquiring Rome Resources, as I mentioned, being readmitted to AIM next Friday. We're actually opening the stock market on Friday, which will be quite fun. We've raised 4 million in conjunction with the acquisition. Rome came to us basically because there's very little appetite for tin, very little appetite for sub-Saharan Africa in Toronto. And so they came to us, we did the marketing, there was quite a lot of interest. And so we think there'll be not only obviously the 4 million, but also a lot of aftermarket activity and interest. The play is really good. Obviously we've got both the soil and the drilling anomalies to support our case. And so far, 3.4% tin and 7.8 copper have been the best intercepts. Pretty good stuff. 8 kilometres along trend from the world's highest grade tin mine, which is a clear positive. A low cost environment with the margin, as I mentioned, maybe at current prices, $20,000 a tonne margin on your operating costs. And tin has a strong forward demand curve. We've talked about that. It's critical in the energy transition. We're getting straight into drilling. So there'll be a lot of news flow, not only updates on the drilling, regular updates on the drilling and also the results, but also there's an exploration target assessment, which is a kind of a precursor to the resource number. That'll be coming out soon as well. So there's a lot going on between now and the end of the year. And that's the story. Thank you.
Thank you. Any questions, please, for Paul? Lady here, please, Steve. Hang on. Excuse me. That's it. We have the microphone. Thank you.
Are there any jurisdictional issues?
There are, yes. It's worth recalling that the DRC is about 2/3 the size of Western Europe. So something happening in one part of DRC has no impact in anything else. Well, we've never had it, or should I say Klaus and Mark, in all of the work that they've done, have never had any issues. There are, of course, on the Rwanda border, there are issues right now. And so, we're a few hundred kilometres from there, and with no roads, it's not as though it's, right next, not like as though there's a motorway between there and there. So you are very isolated. And Alphamin is testament to the fact that, they've been operating now as an operating tin mine for 5 years. As I said, they've just increased their output. They have no problems whatsoever. The DRC government is very resource friendly, so they will do whatever it takes to help get that over the line. Obviously, they get their tax dollars. So, yes, there are issues in country. Klaus and Mark have been operating there for 25 years, so they've done well, and I'm sure they're going to continue to do well. So I'm hopeful that it won't really be much of an issue.
Thank you. This gentleman here, please.
Yeah, thank you very much. My question really follows on from the lady's question and your answer. Thank you very much for that answer, because we all know the problems that are occurring in Mali and Burkina Faso and now Chad. And we also know the reasons why they are occurring and who is behind that. So you said that Alphamin has been operating for some years. What countries' companies are behind Alphamin? And am I right in considering that Western, and particularly Canadian and Australian companies, haven't had any problems so far in DRC?
No, that's Alphamin is a Canadian company.
Oh, right.
Yeah. So,
so that suggests the the Wagner issue is not an issue yet.
That's right. No, I mean the rebels in DRC, in Eastern DRC, if you compare those to what you would see in, as you say, Mali or Niger or places like that, where you have Islamist rebels, you wouldn't be able to negotiate with them. Whereas the rebels in DRC are looking for an economic benefit, and therefore there is potentially, an easier route to negotiating. I mean, at the moment, Rome they employ about 45 locals to do all the kind of site clearance and everything that's required. So it's very much keeping the local community happy is pretty much key.
Okay, thank you. Any other questions from the audience, please? Tim? Over here, Steve. Thank you.
The slide out there says you've got 3.4% tin and 7.8% copper. How much does, on the assumption you can recover that copper, how much will that contribute to the overall value of the mine?
Well, there's copper and there's also zinc. That's only in the Montagoma structure, and 7.8% copper is a good grade. So estimate, I mean, I can't really say, but I would estimate it's probably about 20% copper. The vast majority of the value is going to be in tin.
Okay. Gentleman there, please, Martin. Thank you very much.
The £4 million you're going to raise, how much certainty have you got around that being sufficient for the early phase? And then what will be needed beyond that?
Well, the working capital report that we had done for the readmission, we've got somewhere between 1.3 and 1.5 million of direct drilling costs in there. That includes all the support, helicopter support, etc., etc. There is a decent chunk in there for the kind of management, general and admin and that kind of thing, but also upside for looking at potentially new ventures coming through. So I'd like to think that we see this as the first one, but we would have a conveyor belt of things. The working capital report shows that with the 4 million raise, we're certainly not going to run out of cash until the end of next year at the earliest. So it's not a case of coming back to the market. It's a case of doing what we say we're going to do and then deciding what's next.
Is that because, going by your strategy in January 2025, did you say, that you'll be looking at selling it on, hopefully?
Well, there will be several options at the time.
Is that why you don't need to raise any more equity as such?
We would take the view, or take a view, should I say, that either we would have more drilling to actually make it into a reserve, to add value by making it into a reserve, or we would find a joint venture partner, or we would sell. So there's several options at the time, whichever's best for shareholders, really.
Yeah, okay. Because it's interesting, you said earlier, I think on one of your slides, presentation, that they came to you because there was no interest elsewhere. Rome, is that right?
Yeah, well, the thing about Rome, although they were Canadian, their shareholder base is vast majority is European.
Right.
So there's very few Canadian shareholders. It just wasn't working, really.
Oh, okay.
So
that's interesting because when you look at those stats there, and the anticipation of tin and the importance of tin, it just doesn't. It seems strange that there wasn't a lot of interest elsewhere, doesn't it?
Well, it's Canada. There isn't a lot of interest in African projects in Canada.
Right.
I don't think. In general.
In general. Okay.
Here, there's a much more, I'd like to say, more sophisticated investor that will see past not jurisdiction, but geography.
Yeah.
And if it's a good project, put money in.
That's why I want to be listed on AIM.
Yeah.
Or you want to be listed on AIM, I should say.
Well, yeah.
Yeah, because I think that another company, First Tin, they're listed on AIM as well, aren't they?
Yes, that's right. Yeah.
This gentleman here, please, Steve.
Yeah, what kind of mines we're talking about? Is any of this alluvial placer mining, or is it all deep mining? And
It's all
how deep you need to go, and what kind of mines are you actually going to
it's
develop? That?
it's not placer. It's in place hard rock.
Yeah.
Montagoma does not have any artisanal activity, so you can start from surface like an open pit. Alpha Min down the road go down to about 600 metres, so it's underground mining for their tin project. So it's going to be a combination. Initially, open pit, and then the deeper will be underground mining.
About how deep you're going to have to go down for the good stuff?
Well, Alpha Min are a little bit deeper in the system, so I'm thinking 300 to 400 metres for us, as opposed to there at 600 metres.
Okay. Thank you.
Thank you. On the price of tin, you're saying, and where it sits with you, is it because China suppressing that? Are they suppressing demand to keep the prices high?
No, I think what's happening, it's not really that influenced by China at the moment, surprisingly.
Right.
But there are a couple of issues. Myanmar have shut down their mines. There are some issues in Malaysia on the tin projects there. So supply has been squeezed a bit,
Yeah.
mainly for kind of operational, environmental reasons. In terms of some of these placer mines are, not great environmentally. So I think there may be some squeeze from China, but China's not really the key, I don't think, in this. It's really demand.
Yeah, absolutely. Okay, thank you. Any other questions before Paul finishes? I think that's it for the moment, Paul.
Okay, thank you.
Join us for a drink.
Sure.